Hello, good morning, good morning. Thinking about a sell here as we break these lows. Maybe we wait for these lows here to get broken instead. Down below that support. But if we can create like a support area right here before the break, then I'll be willing to take it right there. So we got about like 50 seconds. This thing's about to rip. I hope it creates that support first so I can get in earlier, because there's a earlier confirmation there by around 44.72. Let's see if it can create me that support. Looks like it's creating me that support. Now wait for a candlestick to break these lows. Oh, wow, man. Look at that push. Whoa. Last few seconds. Man, there's so much volume in here. If it can come down. Hey, good morning, Luke. So much volume in the market today. Maybe we should get it here or wait for this one. Boom, boom, boom. I think it should be good like right here too. Gotta wait for the full break. Should we wait for the full break? What do we get in the early one? Early one should be solid there too. Yeah, I think I'm gonna get in the early one. What is good? What is good, chat? Welcome back, everybody. Markets are moving. Gold is moving. Loads of volume in here. See how everybody's doing? Azen. ADFAD. Welcome, welcome. Yeah, I'm waiting for this flip. Like, Goldie is literally just pouring today. Look at that way. The 5-minute candles there are like really struggling. So notice the way gold is coming down heavy right now. We're trending downwards. You see all this volume of price coming down. Look at how the 5-minute here is struggling at a resistance. So you got multiple rejection wicks. So I was like, if this candle here flips, there's a pretty good probability that a price moves down bearish. You got that 8 SMA as well as confluence. As you can see, that 8 SMA is nicely bullying this candle right here. See how it's holding it down, pushing it down. We're about to get the new hourly open there too. Candlesticks are huge as well. This is a lot of volume that we're seeing. 1-minute SMA is looking good too. Yeah, this 1-minute candles are big. So we got triggered in. It's got to be a zero drawdown. Because these little pullbacks are actually quite big. Yeah, yearly candlestick is coming to a closure here. We got about 20 seconds till the new hourly candlestick opens up. Oh, what the hell happened here? Look at that. Hourly just opened with like a bit of a gap there on my broker too. Oh man, that's why we wait for the hourly candlesticks. That's why hourly opens are so important. We just got the London session here open up. Holy! Little market psychology there. Went to grab some people real quick. It went for a quick little grab. Man, this 5 minute on my broker doesn't even have a bottom wick. It just gapped down. It gapped down and then it came up. So I'm waiting for a re-break of the lows. I think, yeah, that should still be pretty valid over here. Sheesh. Super volatile. Here we got on the London Open. Holy. All right, I got triggered in here. Waiting for price on Goldie to now melt. Come on, Goldie. Stop loss to break even. Stop. Oh, damn. Too much volatility. Oh, can't believe it. Oh, Tippy got hit. How the hell did that happen? Oh, we got Tippy over here smashed though. Congratulations if you all managed to catch it. Let's go. How did that get me? That made no sense. Barely even pulled up on me. Wow. Man, but congratulations. Managed to catch this trade over here. Well done. Very well done. Let me pull up the chat. Where's the chat at? Hope we all good. Good way to start the year over here. Oh, well, not year, but last week of 2025. I'm just trying to pull up the chat. Morning, good morning. Good morning, good morning. Managed to meet my target for a December over here, up about 30%. That should actually be a W though, to be fair. Do 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 do. Awesome. Now we can go enjoy the holiday. Trade is finished. Job is done. That could be a fake out. I think, you know, price is moving down here. So there's no reason that I would look at this and say this is going to be a fake out here. Because, you know, price is moving down. It already pushed about a 54 pips. Just got about 54 pips there in like about 2 minutes. that price move down. Very nice breakout. Here on the London Open, it came here to get some orders. It spiked above real quick, just took out some positions, and then completely melted down. Yeah, it's got like really nice range on the 5 over there too. Five-minute still looks pretty nice. You can get through this zone here. Got like a support. You got the next support area. Its range is roughly around, since that peak wick over there, you got about 100 pips on that range. Dun, 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 dun. 25 seconds in the trade, 1.6%. Amazing. Yeah, that was pretty fast. That was pretty fast move here. Really fast move over there. Hey, Woods. Well, oi, my people. Hope you had a great Christmas. Hey, Jane. Nice to see you back. Let's see. I understand the daily bias being bearish, but I'm biased to the upside from the 5-minute upward continuation in London session. Yeah, I think like if you're gonna look for a buy, then you gotta wait for price to, you know, start breaking above some highs over here. You need to start creating some new higher highs. Price needs to break above maybe like 44.81 over here, and then you can see if you can get a buy for price to keep moving up here. It's like 145 pips. It needs to break above this high over here though. 145 pips. Then you can see that you got some buy confirmation. But you see, like, since the London opened, it's still been moving down. Even you said on the 5-minute you're looking for confirmations. Look at the 5-minute candles. What are they doing? How are you looking for buys when the 5-minute candles are coming down? You know, I think you gotta wait for some kind of a structure over here. Because right now, price is inside of this range. It's coming like some kind of consolidation here. And it's still like looking for the breakout, I would say. I think this is like the first break right over there. But it's still within this accumulation. It's still waiting for that breakout. So if you're waiting for a buy, yeah, definitely wait for price to break above like some kind of resistance here. Yeah, chat. But I think sells have just been the order of the day today. Just took some sells this morning as well. Really nice sell over here. Price just completely melted. That was my first position. Really good trade. And that's my second trade over here. And that's it. That's it. I'm done for the day. See, wow, that TP was perfect. Very nice, very nice. Look at this. Entry, exit, beautiful. BTC USD. I think Bitcoin hit like what, 85k right now? We're like 85k. Yes, it's losing a lot of value over there, Bitcoin. Now that would become looking like a fake out now if it could break above that resistance. How it like swept below these lows here. But huge candlesticks. Like, I mean, come on, a fake, you know, a fake out, when we talk about fake outs, it's usually when you're getting faked from a trade, it's gonna fake you out. Maybe it's gonna give you like 5 pips, like 5-6 pips, and then reverse on you. It's not gonna give you a 55 pips. But this is, I guess, like a fake out that would be happening on the higher time frame. That's a pretty big move. You see like a 55 pip drop over here. But you see, the thing is, like, people who are going to trade the higher time frame, they're still in this trade, right? So for them, 55 pips might not even be like anything significant. So that's why they're going to have profitable trades like this start going into kind of a drawdown over there. That sell you took earlier today looks exactly like the simulation sell we had yesterday. Yes. Yeah, you know, that's the thing. That's the thing about the simulations. We're going to simulate it and then we're going to do it live. Because if you can't even simulate it, if you can't even backtest it, then you don't know what you're looking for. You know, it's a bit harder for you to get what you're looking for in the market. You have to be able to identify back testing and then obviously forward testing. And then all you got to do is execute. Is just execute when the time comes. Yeah, correct. But you see, people don't do those. They don't like to come for those. They only like to come for these. You see, it's a big difference. It's a big difference. Only a small percent of people actually go for the educational part. A larger percent of people just go for the main thing, you know? Like, generally speaking, that's just the way it is. You know, it's like, even if you look at, we kept talking about Trust Wallet yesterday and how 90% of all crypto holders have that crypto inside an online wallet instead of just investing, you know, $100. Man, imagine that. Just invest $100 and you can save $30,000 if you got 30K in an account. Or if you got 50K, 100K, 10K, 5K, invest $100 and you can protect all of that. You know, that's your insurance. But you know, people, they kind of just like to jump in. They jump in everything. So when you're going to start trading, you're also going to jump in. Instead of spending $100 on education, you're going to jump in $10,000. Let's flip this account and get rich. You know, but the thing is, like, the good thing is you're going to learn. And when you're going to learn, then you're going to start to see some progress over there. But, you know, it's all like a journey. It's all just a journey for people. Because I think, like, what I noticed, no matter how bad you are, is sometimes the universe sets everything up in a way that you just have to learn. You just got to go through those trials and tribulations first, you know? Like, even if you know to do better, you just got to go through it first. That's why you're going to tell a kid not to touch a hot stove, and the kid's still going to touch the hot stove. He knows it's hot. He knows it's going to get burned, but there's, you know, sometimes you got to learn like that. Yeah, but good to be back. Good to be back. We're back on stream this week. Let's see. We only got Wednesday and Thursday, which is going to be something that we have to be cautious about there, because it's going to be the new year and we have bank holidays. Wednesday, Thursday. But markets has been moving quite a bit. Like today, you know, Luke called it out. Spoke about this yesterday. Some pullbacks that we're meant to be getting or potentially getting over here, and lo and behold, we got 1,000 pip candlestick, guys. 1,000 pips. That gold has just done right now. Got the daily bias over here. You see, daily bias is saying bearish. Look at this other candle here. Candle is about 1,119. Insane. Now look at this. Yeah, I think towards the end of the year here, this last week, we could be seeing some pullbacks. We just tapped we're actually short of 4,600 psychological mark right there. Yeah, only about like 500 pips towards like 4,600. Pips towards 4,600. Gold is predominantly still bullish, I would say. I mean, the daily just wicked below those lows, but it hasn't really like closed any significant area. You know, you have like support over here. This candlestick just like having a pullback. It hasn't really closed anything. It looks like some kind of liquidity grab on the 5-minute though. It's kind of weird on the on my broker's end. The 5-minute candle here closed like a doji, a bullish doji candle. And see, now it's starting to break above the highs here by 44.81. So it's gonna try and distribute. This week and next week I might not be here much. My brother is visiting China for New Year, and my birthday as of 13th January. I'll be every stream for sure because I'll be a full-time trader. Amazing. Full-time. Let's go. Your birthday went 13th Jan. You probably got birthday gifts and Christmas gifts maybe once during Christmas at the same time, I bet. It's not too far off. This month, 3% down. Very good. 3% is, you're still doing better than majority people 3%, trust me. You can take pride in that because, you know, in trading, the good thing is not always the winning part. It's also the how to lose part because people don't know how to lose. You know, so if you know how to lose, you're in a sense already winning against majority of people who don't know how to lose. So I think that's also pretty good. Negative 3%, not bad at all. Because, you know, you can make that back easy. That's the thing. Because even when I go on a losing streak over here, I can be down 2, 4, 5. I can be down close to like 6%, it seems, on this. Oh, it's down about 6% on this losing streak. You know, it's so easy to compound losses. So it's not like 6% over here, and then, you know, you're gonna slowly build your way out of it. But you don't want to fight the market, right? So you just gotta slowly build your way out of it. Take small dubs here and there, look for running trades. You gotta look for running trades. The thing about running trades, you gotta look for running trades. Like, the best example was yesterday's simulation that we did. How we looking for running trades, you know, and how we caught those running trades. So you're gonna catch some running trades, and that can help you dig yourself out of this. Just like we also mentioned in the yesterday's video that we also did, not the simulation but the video. If you're gonna be coming on to the charts and you're gonna take like 2 trades a day, maybe your first trade is gonna be like that 1 to 2, right? Because you're gonna learn about runners, and the more you see your trades run, the more confidence you're gonna build in those running trades. You know, so if you take a buy over here and then you have 1 trade just run, you're gonna build more confidence in those trades. Then your next trade, you can risk less on your next trade. Right? So that's what we did. That's what I do today. That's what I do every day. And that's why even if I take a win or a loss, it doesn't really matter on my second trade, as long as my first trade was a W trade. If my first trade was a losing trade, then, you know, I'm going to maybe call it a day depending on how big that loss was. But I'll still reduce risk on the second trade. The compound losses for breakfast. Yeah, let's get the gifts on the same day. W Wood's birthday. Yeah, I got a buddy of mine whose birthday is also on a December time, so he gets both of them too. His name's David. Hey, Merry Christmas and Happy New Year, Vic. Man, I'm sick of the holidays. Yeah, me too. I'm done with the holidays. You know, holiday time is just like, it puts you off your game a lot. Man, look at this thing. It's just running over here. And congratulations. You see, now that buy idea that somebody in the chat was looking for, you see now you get like a confirmation here that price is moving up again. You see this? But sure, you could have guessed it and then assumed that price was gonna continue moving up, but people were already looking for buys when the London session here had dropped like about 50, 60, 70 pips. Correct? So the question is, would you have even survived that drop in the first place of 70 pips? But you see, if you just waited for price to break above resistance and give you some kind of a confirmation over here, you see price just moved up. Zero drawdown. Look at this. Zero drawdown. Look at the same thing over here. We took a sell. Zero drawdown. You just have to wait for your confirmation over here, because everything in the middle, this is all going to be like, you know, 50-50. What price, guys? Especially if you're going to be looking for a counter trend trade over there. So I think we could say XAUSD buy is called over here by 44.81. That price would break and then keep moving up to distribute from this general accumulation over there. Pretty nice. Hey, Lisa, thanks for the sub. Nearly at 50K. Let's go. December 22nd, I get both also. Wow. Man, what are the odds? So many people here got the birthday on December. Or, yeah, I mean, only got 119 people here, so so many people. Oops, is the S word banned? Why? What S word? Oh yes, I think it is. We don't like the S word over here. Makes people nervous. But we don't like to be nervous. We just want to have stress-free trades. That's all we want to do. We wanna eliminate as much second guessing as possible, because you know, it's like when people are gonna second guess a lot, that's, you know, nothing ever gets done. You should become a man of solutions, not a man of problems. Because it's easy to, like, the thing about life, it's paradoxical, right? So there's always a problem for all solutions. Like, we're really good at doing that as human beings. We really love to find more problems. I mean, like, generally speaking, there's a few people who create these amazing solutions that we benefit from. But yeah, we just have to practice on that. It's a skill to be solution orientated than problem minded. You know, like, for example, the Mariana Trench. Man, like, I think it was in the 80s or something like that. Like, we got some people go down towards Mariana Trench, like all the way down, with that very limited technology that we had back in those days. And for 50 years, no one had ever been down there again, because it was so dangerous, because, you know, of the water pressure and everything, that it was never accomplished. We had like 12 people on the moon before anyone went down there again, right? And then somebody else went and did it again. And then when that person did it, you had a bunch more countries started doing it more often. Then you got like 50 plus people who went down in the Mariana Trench in such a short duration of time. But for a whole 50-year period, even after one person did it, nobody touched it, because they said, man, there's too many problems down there. You know, even the first people who went down there, the window kind of cracked or something kind of cracked because of the pressure. They spent like 20 minutes down there and then they came back up. But like, people are like, man, too many problems, too much can go down there. So you see, it's only like now when the next person did it, now everybody gets confidence and they're like, oh, okay, so we can actually do this. It's not such a big problem. And like, had more people go down. I don't think it was like completely to the bottom. I think it was at some kind of like a level, because I'm not sure if we've actually gotten all the way down to the bottom. But you see, it's just that mental model that, you know, you gotta kind of like investigate, and you gotta study people. And, you know, I love to study people. You know, that's the thing about me. Like, even when I did my master's degree, I did like anthropology, right? Because I like to study people. I like to study the human mind, how people think. And, you know, that's also related back into my trading, you know? So that's the way I look at markets too. And I always try and connect the dots, even when there's no dots that might seem like it makes sense to make a connection. I just like to find ways to make those connections. Why did silver move over 10% on Friday? I'm not sure. Someone said like we should look at silver. It's 10%. That's insane. 10% on Friday? What day was Friday? Friday was the day after Christmas over there. Holy, 10.58%. Like total from bottom to high. There was a lot of volume that happened on Christmas Day. Imagine that, man. That was like a bank holiday and so much volume. So much volume. Look at gold here on Christmas Day. We did about 1,000 pips, about like 2.60%. Right? It also did the same thing. Look at this. Candlestick had opened up here without creating a bottom wick. Same thing that happened on silver here on Friday though. Candle opened up without creating a bottom wick. It's always like on the time, during the time like people least expect is when the markets are gonna move. It's typically like that. It's it finds a way to And it does it in all forms. Like, for example, it's very elusive. Let's just say that the market can be very elusive, even on the lower time frames, like the 1 minute time frame like this. So like when we took the sell over here, before the sell played out, it tried to take some people out first. You know, it happens so quick that you can sometimes overlook certain things like that. Right? The market can be quite elusive. It's only like in hindsight. People are like very good hindsight traders. You know, so whenever you take a winning trade, awesome. But when you take a losing trade, someone's going to say, oh, you know, that was obvious. But it's only obvious after it happens. It can't happen. It can't be obvious before it happens. Before it happens, you got to like follow your rules and stick to your analysis. Like, you know, definitely I was looking for sells here. Some people are looking for buys. And it's just a probability of whether a buy would play out or whether a sell would play out. But the thing is, both of these two were correct, right? Because we did end up buying eventually, and we did also end up selling. The question is, where was your stop loss? Where was your TP? Right? So how could you maneuver this area over here? Because we're always right. Buyers and sellers are always right. Happening at the same time. Even right here, someone may be looking for a sell. This price is moving up. Got to sell. Maybe someone was looking for buy. This price is coming down. Got to buy. It's all a matter of like, can you identify that consistently and execute on that idea? Because buys and sells will play out. Going crazy longs on AUD USD. Nice, nice, nice. Yeah, I think like another thing is what we spoke about in yesterday's simulation is, so remember yesterday's simulation we're doing like pre-London. So yesterday's simulation we were catching trades like basically this. Remember yesterday's simulation? We were basically catching these bomberclad trades. Same thing that we caught today. But remember what we also did in yesterday's simulation? After we caught that bomberclad trade during that pre-London time, we started looking for buys. Correct? Because during the London Open, since we've already moved down during pre-session, there's a good probability price is going to move up, you know, during the London session there too. So you see, it's like, it's super important that you have those small ideas as well, but at the same time, just, you know, it's just something that's going to help you build confidence. Because it's the same thing like with New York session. New York session, let's say if price has been moving down, right? New York session, if you see price move up and take out some highs like this, we know the New York session likes to fake out a lot before it continues with the daily trend. So it's like when you understand the time that you're trading, you gotta understand what you can kind of get away with. Because for me, taking a sell here, awesome. We're going with the daily bias. But I also know somehow in my head, it's probability just keeps selling off. It might be a bit less because we're coming in a little bit later over here because majority of the sell already happened during pre-session. So if it actually end up running, you know, amazing. It can run to like support over there. But you see, at the same time, we know that price had already moved down. It already had its push right over here. That's where it took a sell. Then price just melted. I think the market was down at that point like 0.50, 60%. A nice little like breakout situation that happened here too. Little beautiful break and retest. Little nice little SMA crossover happened. 50. I think that was an A cross the 50. A cross the 50. Break those lows and then distribute. Loads of selling pressure as you can see right behind here as well. Market's moving down. That's just a pullback, a setup, continuation, which is essentially what we just did right now. A pull up, consolidation, and then a continuation right over there. See, it's essentially the same thing that happens. So if you take this little piece of action and then zoom that out like those Russian dolls, you can see it's like, you know, same thing that happened right here. But obviously it doesn't happen like perfectly, but it's the same thing. This one was just a little more choppy on the way up. as you can see. But eventually it did hover and then give what it was supposed to do. Break the low and then distribute there. This other one was a little bit cleaner. It looked a little bit smoother. Also because I guess on the 1 minute. Boom, boom, boom. But it didn't give the follow through. It did give the follow through, but not to the extent of distributing as much as a pre-session would. This price is bringing in the greedy buyers now as well. People who took like a buy over here, they were in profit. Let's say about 50 pips. Ooh, 64 pips. You see, just like this trade over here, how much is this trade in profit? There's roughly about, you know, like 55 pips. So you see this? Look at this. Key confirmation areas. Boom. Boom. It gives you a profit, but if you're too greedy, this is what's going to happen to you a lot of the time in the beginning is you're going to overhold or like overstay your welcome. So you're going to have like a lot of these profitable trades now become drawdown trades because you're overstaying your welcome over there. You see, it's very difficult. It's very difficult to have a big stop loss, like a massive stop loss in intraday trade, because even at the same time, this could be a stop loss hunt right above that accumulation. Right? So take them out and then it would come down. And then you can really see that flow of the market that makes it sometimes difficult to trade. Then I started looking at that. I'm like, okay, you know, if I can get price to move in the beginning was 10 pips. That's what I used to look out for, 10 pips. If I could get price to move like, you know, 10 pips, that could be interesting over there. Like if my entries could move like 10 pips and then I manage my risk in drawdown, that could be something worth investigating. Because, you know, otherwise you're going to have these really big trades going to profit then come against you. Bitcoin is negative for the end year. See what's new, trading view. Level up your analysis with newly added stocks indicator. Eurex options data now available. Access to CME options. CME options directly on TradingView. People are scared of Bitcoin. They saw Bitcoin dip towards like 85k over there. And people have been fearful of Bitcoin. You know what's the scary part? Why Bitcoin is coming down, I think? I think it has something to do with quantum computing. I think it has something to do with quantum computing. But you know, the thing with the quantum computers, they're going to disrupt everything. It's not just going to be crypto because, you know, the quantum computers could decrypt the cryptography for crypto blockchains. So I think it had some kind of advancements there with the quantum computing that maybe made some kind of fear in the market. Not exactly sure. But I think like quantum computing, if it could do cryptography, then it could do banking systems. You know, because I think the blockchain is more secure than a bank is because your blockchain is decentralized, right? Whereas a bank is centralized. So crypto is actually more secure than a banking system. So man, if crypto is under attack, imagine what that could mean for a bank account. You know? It's more centralized over there. I think the only thing with a bank account is if you're gonna lose some money, at least they got some kind of insurance. But crypto, there's no insurance, but it's also at the same time more secure. Bitcoin is failing because Bank of Japan is rising rates. I'm not sure. I don't think the Japanese interest rates should affect crypto. See, Bitcoin structure is bullish, backed by strong support zone. Analysts see the lack of a sharp drop as a positive sign, raising hopes for all-time new high. Classic crypto. Price comes down, it's just as good as a new all-time new high. Classic crypto mentality. Bitcoin has recently fallen below significant price of $90,000, dampening year-end optimism in the cryptocurrency market. On December 26, Bitcoin ETF saw a net outflow of 275.88 million. Let's see, Bitcoin edges higher, but recovery remains weak. Continue to struggle for meaningful recovery. The cryptocurrency has recently failed to sustain levels about 90k and has fallen considerably from the record high of 126. In the year to date, Bitcoin is now down 0.4% despite a strong performance earlier in the year driven by optimism over President Trump's pro-crypto agenda. See, profit-taking, risk aversion, and less regulatory momentum than expected are among the factors that have caused Bitcoin's sharp pullback. Yeah, it's quite interesting. I was gonna get like a Freaky Friday towards the end of the year. You know, low-key, what I think that happened with Trust Wallet, man, I think the people who own Trust Wallet were part of that thing. I really do think so. That they kind of made themselves some fun coupons for the end of the year over there. Because, well, what's the probability, chat? Like, you got a browser extension that you're pushing out an update on Christmas time, and that same browser extension has been compromised. And nobody saw in the code. You're dealing with hundreds of millions of dollars. And nobody saw in the code that, you know, some kind of thing has been compromised. How is that possible? Like, you gotta like really think about that. You know, security wise, how do you push out like any kind of an update and not notice that the code has been tampered with? Yeah, we got kind of a freaky end of the year here. Because people borrow yen to invest in risk on assets. Oh, back in the gulag. Back inside the range here. We got like one fakie. Boom. Another fakie here. This range is around 225 points, pips. It's kind of like chopping up a little here now. Well, pretty good London, to be fair. Like pretty decent volume that we got. I think TradingView also had a few updates. We got like, I don't remember seeing this diamond here at the top left-hand side. Got news, we got seasonals. Man, this is how gold has moved this year. (2020, 2025). We got technicals. Oh man, looks like a spaceship. This is how it feels going when you first come onto like TradingView for the first time. Feels like a spaceship. Oh, we got this as a indicator here that shows you how strong each time frame is. Got the hourly, it says sell. Everything is more selling pressure. It's when you get on the higher time frame, the 4 hour is saying buy. Those are the moving averages. Here and then neutral. So what the daily says? Daily says buy. I say monthly is strong buy. Look at this. Everything on the monthly here is just all the way up. Strong buy, strong buy, strong buy. It's actually kind of cool. It's still moving slightly too. It's like you're driving Bugatti over here. Very nice. Oh. Wow, look at this. Price has just come down again. 1 minute candle here dumped like what? 67, almost 70 pips. Insane. This is really gonna like push people's buttons because I know people get into trades like this and have stop losses like this, for example, expecting like really big moves, and then you're gonna see something like this happen to you. Right, where it's just like goes above it slightly, then it's come back to break even over here. Like, damn, got stopped out. The one group of people I wish I really studied though was ICT people, like fair value gaps and inversions and all of those things that they talk about. Because I did mention, like, I like to understand all of these things because it gives you sort of like an idea of like the mental model of a lot of people. But now I've just gotten to a point where I just don't even care anymore. But I think if you've been studying a lot of fair value gaps and that sort of thing, you can use that to your advantage to when you find a system which is profitable to help you understand why it's working, for example. So you're kind of like balancing the ideas that you've been learning to see kind of like to kind of corner the market to sort of like better understand it, if that makes sense. You're buying. Godspeed, Godspeed, Godspeed. Nice little distribution break that we just got right here too. Little situation when we broke these lows. Very nice follow through on that. That was about like 40 pips. 40 pips on that break. It looks pretty smooth. It looks like this one right here. But this one is pulling back crazy for some reason. But when you see the candle close, it looked pretty smooth. Same here, it's got like zero drawdown entry. This is the reason why I love this kind of days, because you get these very nice pushes. These candlesticks are huge right now, chat. Like, these are huge candles. Even like a 20 pip stop loss here would still be like within a range like this. Massive candles. See the size of that 1 minute candle here is 20 pips. So you gotta ask, like, how can you gonna have a 20 pip stop loss if 1 minute candle is 20 pips? And I think the only way you gotta do that is through refinement. You gotta have an entry which is refined, because this easily can stop you out. If a candle is 20 pips and your stop loss is 20 pips, you know, you have to have like a very good refined entry over there to limit as much drawdown as possible, because it's a drawdown which is killing you if you like to be kind of like a scalper. Those pullbacks, you know, those pullbacks, can't get your stop loss above structure without extending it. So sometimes the solution is figuring out where the entry is the most efficient, because there are some entry models which actually are just not efficient. Like, you can expect consolidation, or they come in at very random points, for example, right? They could come in inside of a range, for example. So they might not be as efficient. So you get stuck in a lot of consolidation. Hey, what's up, the doctor? 5 minute close below 2, possible shotgun. Oh, nice. Yeah, exactly. 5 minute candle close below support. No bottom wick on the current 5 minute. If this thing reflips, it's going to be a similar situation like with this trade. Candlestick open. There was no bottom wick on my broker, at least, because it created a gap on the open. And then when it reflipped, it just distributed. It's the same as this. See, no bottom wick. Got about 58 seconds. Reflips and breaks these lows. See a small wick fill here. Maybe come retest this zone by 44.66. Look at this. Pulling up again. Retesting. Got 40 seconds. Can we do it in 40 seconds? 22 pips in 35 seconds. This is a countdown here. Let's watch 30 seconds. Can gold do it? Because, you know, the market does these things in the last few seconds. It loves to do it. Just like you saw the yearly candle is pulling up. Imagine like on the last few seconds, this is a yearly candlestick, right? This is a yearly candle with a few days that you see how it's reacting here towards the end. Getting those pushes and you get the volume in. Look, it actually broke. It actually flipped and broke in the last like 10-15 seconds over there. So now imagine that happening on a yearly time frame. That's why we're seeing candles with so much volume right now, chat. That's where all that volume is coming from. Crazy. Closed bearish over there too. It's a very annoying closure. The reason this is a very annoying closure is because Remember what the hourly candlestick did in yesterday's simulation when we were looking at the buys? It doesn't give confidence when a candlestick closes like this. But at least it broke the lows to show like some small continuation. But on the simulation yesterday, we got an hourly candlestick close like this, right? Because it played around this whole area, but it didn't move. And then the next candle didn't break the previous hourly candlestick highs, because it was a buy. And then we use that as confluence for the sell that we took. That was a pretty good sell too. Completely sold off. But yeah, this is something that you don't want to see. If you're gonna get like a shotgun play, the best thing is, man, if this candle here was just to create that top wick and then break it properly, because that shows less confidence in the market. So a small psychology of candlesticks over here. That's why they call these candles though the indecision candles. Whenever you get a small candlestick body and then you got long wicks like this, pretty much the same thing that's happening here. You get that indecision candlestick, right? Thing is, it can be good and it can be bad. In a situation like, depending on what you're looking for, you have to read in context of what's happening. So for a breakout, let's say if there's a breakout happening on the 1 minute and you got on the higher time frame that happening, that's perfect, right? That indecision is going to show you a nice confluence for whether the break is going to happen above or if it's going to happen below. But if there's no breakout such as this, and if it's just like candlestick confirmations like closing above or below resistance or support, then it starts to get like a little bit risky. All right, look at this, still trying to come down here. My candle formation are not the same as yours. These prop firms are manipulating the price. The price is never going to be the same. Like even on my broker, the price is, it's as close to this as possible, but there's always going to be that odd gap every now and then, that odd thing that happens every now and then. Like it's never perfect. The thing about perfect in market doesn't exist. Like you can't draw this line over here and say that's 44.66 and expect everybody to have that same exact line. Right? For some brokers, like price come like this, and then some people will already get triggered, other people will not get triggered, for example. And then also depends like how you're going to be doing your analysis. You know, what broker are you even using to do your analysis? Because maybe 44.66 but 90 here might look a bit different on another broker on TradingView based on how the candlesticks are closing. So yeah, perfection in the market doesn't exist. I think the only thing that exists is just consistently showing up and executing and just keeping it moving, right? And not being perfect and just managing your risk. Can you use correlation as a confluence? Yes. Like if we see, for example, dollar is doing quite well today. I mean, yeah, if dollar is doing well today, then that will be nice confluence for sells. The only thing with confluence is this is a higher time frame. So how does a daily time frame, how much is that really going to affect your lower time frame trades? That's the only thing that you have to consider when it comes to like confluence correlations. This is really good. You know, people who are going to use like correlations are more the same people who like smart money trading and they like seasonal CTO data and all of this stuff, because they're on a higher time frame. So for them, correlation can make a lot more sense. For us, it's just noise. Looks like it's coming back to finish the job. Is the job finished? Kobe Bryant. The job is not done. But you're up 3-0. This job's not finished. It came up. It just needed to like take out some traders over here. That's all the market did. It just came to take some people out. It also paid some people. It made some people some money over there too, obviously on the buys. Called out these buys over here. But it wanted to fill this range. So you're going to have some days where that doesn't happen, where it just does what it was meant to do. And you're going to have other days where it fakes out first and then like fills up the range. Ideally, you'd want to just have price do what it's supposed to do, correct? Like, so if it was supposed to keep moving down, will just keep moving down from here. What you're seeing this as is a variable right over here. This is autonomy. Autonomy. How do you spell it? It's like the market autonomy, right? So over the years, I started realizing that people think that the market moves based off of blueprints and book maps and all of these things. But man, like over the years, looking at these markets, putting in this 10,000 hours plus, they're autonomous. They're autonomous. The market will move where it wants to move. It doesn't matter what your book map is saying, where the volume indicators are showing you. The market's going to move where it wants to move. You can think of it almost like artificial. You know, a lot of things in life are artificial. The more you dig into our economy and finance and everything, you start to realize a lot of these things are artificial. Nothing is really governed so much by these really strict laws. That's why, you know, the US can print as much money as it can. That's why you're seeing also the small AI artificial bubble happening with NVIDIA too. How these big companies are just sending money around to each other. That's why you got artificial economies as well. Some economies look like they have a lot of money, but you're gonna dig into it and say, well, what does this economy do? Like, where are the businesses? Where are their industries? But on the ground, you see like so many people have money. You see buildings are up in New York City and nobody lives in those buildings. Like, why are they so many buildings here? It's so many empty buildings and all of these things. Then you start to realize a lot of it is artificial. The way money operates is very artificial, right? Because money doesn't know the difference between good or bad people or anything of the sort like that. It just exists. Just the way like the market can exist. It's just existing, right? But over the years, you start to really dig into that and really understand how money works. The idea behind money. And break some misconceptions about money. Like saving money is a huge misconception. Like a lot of people are very much penny pinchers. They love to penny pinch and they think they're going to save themselves till retirement. But money, like when you really understand money, it doesn't like to be saved. You know, money is the laziest worker. If you save money, it's it can be more detrimental to you to save money. That's why a lot of like super rich are cash broke. You know, they're cash broke because most of the money goes back into like actual assets and things that can generate some kind of a wealth over there. A lot of rich people are cash broke. Safe to be cash broke. But look at this. The range has been filled. Let's go, Goldie. Range has been filled. It's like when you get the order filled on the terminal. Order filled. We should get one for the range. Range filled. Because, you know, this is something we've been speaking about, like even yesterday's simulation, the importance of these ranges. Because it doesn't always got to get filled, but you could definitely expect like some kind of a push through them. Like this was a 68, 70 pip move. And then this was also a nice little push down towards support now. It was 143 pips, but it peaked at about, from this wick break, 37. From our entry, 55. Then it came back to finish the job. Right over here. Because, you know, like the volume is still predominantly bearish. The daily bias is still bearish on gold spot. Feel the range. See, now it's like it's down at the bottom of the range here. And sometimes you just blast through those ranges. Like if this was a simulation trade, let's say we're just skipping candles, it took a sell over here. The idea would be price to fill this range, and then that's it. We don't know what's going to happen here at this point. Because see, as prices come down to fill that range, if you go on the left-hand side, there's nothing over here. See, there's nothing. Just emptiness. But then sometimes you get like that little surprise. Candlestick just completely dumb. Like that. And then you gotta investigate those types of days and see like what's really going on. So I think like on a specific day like here today, we're just seeing a huge profit taking in the market. I mean, look at it from the Asia Open. Asia Open just completely nutted over there. Look at that, just a load of selling pressure, even right here, up till this point. So you see, you're looking at that market structure, and the market structure is actually moving down. You know, so if you're gonna look for a counter trend move, the only time you're gonna have like that super confidence that price might start pulling up a lot is now if we start also respecting area like this and then keep moving up like this. You know, at least we're gonna respect like one key zone for price to keep moving up. But you see, right now, the opposite is true. Price is still pushing on down. Look at this. Might even blow through that support over there, just because of the amount of volume that we're getting on the daily bias right now. So that's why we got this indicator, chat. And trust me, watch yesterday's video. What did we say? The 3 things which you can implement today, even if you have no strategy. Yesterday's video, what was the number 1 thing that we put on that list? Trending markets. Stick with the trend. Number 1 thing was trending markets. Top of the list. And you're gonna have like a, because if you're finding yourself like, let's say, taking a lot of losses, just following that one rule, I think is gonna help you quite a lot. Sell it off. Sell it off. Sell it off. Because you know the worst thing, man, the worst thing these days used to kill me. These days used to I remember like so vividly, GJ, during these GJ sell-offs, there was a time GJ was selling off quite a lot. And I would always be looking for a buy. Man, and by the time I was trading the New York session, I would just look at that pre-London and London and just think to myself, what the, you know, like what was I thinking? Price just went in one direction the whole time, and I was just looking to do the opposite. And man, those are the worst days, because I would look back at those days and I would be like, all I had to do was hit a sell. Man, I would see people make money on Instagram. I would see people make money on YouTube, and everybody was just following the trend, and I was just trying to do the opposite. You know, and that, I think that's the worst feeling, is when it's so obvious, but you still want to be a hero. You know, because you can lose trades in like all kind of conditions, but like when the market is really in one direction, you lose a trade, you really beat yourself up about that. You know, really beat yourself up about that. There was one time last year, I took a sell idea. Man, gold was so bullish. It was in 2024. It was sometime in 2024. Like price was just moving in one direction, and I took a sell signal. And also the emojis I was getting on the sell signal was like scared emojis and all of these emojis, because it was so obvious that everybody could see that price was moving up. But you know, I was trying to be a hero. I took a sell and I just got stop loss hit so bad. And I was like, damn, man, why did I take that sell? You know? Yeah, but for right now, I think that range has been filled. So we're gonna see some kind of a reaction here now. So number 1 thing, if you watch that video, watch this before you go into 2026. If you're a trader on my channel, that number 1 rule is really gonna be super, super important towards how the rest of your year is gonna go. Because I used to take a lot of back-to-back losses just by not following that simple rule. And the problem was that I didn't know how to follow it as well. I didn't know how to determine if the market is moving down or if it's moving up. You know, I didn't have any tools that could help me, because when people were teaching back in 2020 about market direction, it was taught in a way that you actually had to know how to read price action, right? From higher to lower time frame and narratives. Remember, we made it so simple for you here. Just get the free indicator in the description box. Make sure there's no gaps on the daily time frame, because that kind of affects the readings if there's a gap. But if there's no gap, then it will literally tell you when the market is going to be either bearish or bullish. See, like right here, there's no gaps. So the reading on the indicator is going to be all accurate. No gap, no gap, no gap. So yeah, that's 2 sells for the day over here. Still not seeing any buys. I think the buys could probably come in during pre-New York, potentially. We might see a reaction now since we've already filled the range down towards like that support zone. So I move from here down towards here. So you're going to see like some kind of reaction. It's going to try and bounce back up. I need to stop interfering with this trade, stopping it manually to prevent much loss for it to constantly go in that direction. Yeah, exactly. Dollar is failing. The best thing to ever hit me was when I learned to not take losses personally. Save me so much money. Yes. Yeah, you can't take it personal because it's artificial. That's the thing about making money. It's artificial. It's an artificial thing. That's why you got people like Mr. Beast on YouTube. He's cracked the code of making money via grabbing people's attention. You know, and you know, you're gonna think like people are all very individualistic, but in a mass we're all the same, right? If we got enough numbers, we're like all the same. So, you know, Mr. Beast has cracked the code of this mass thinking of how to grab people's attention. And it's crazy. Like the amount of money that guy makes, he makes millions of dollars on YouTube ads, which is insane to think that somebody can make so much money from those videos, and then YouTube pays this guy like millions of dollars because it's cracked that code. Yeah, YouTube's a bit of a bum too because they take like they take a lot of money. YouTube takes around, I think, 30%. You gotta pay YouTube 30%, and then when it comes into your account, then you gotta pay more taxes, I guess, like based off where you live. It's quite crazy, actually, the amount of money that government takes from people. I'm holding my gold sell from 45.05 target TP price 43.38. Nice. You know what's better if you're gonna send a chart here? So you got some guy took a sell, very clean, straight to the point. Sell position. You know what really helped you was the daily bias, you see? Like super bearish on this move. Look at that, pull back up. Boom. Amazing. Simple chart. Not a lot of lines. See one line here. Got another line here. You got another line here. So easy to understand. You got a support and you got another support. Candlestick broke and closed below support. Started breaking previous candlestick lows. Distributed. Look at that hold. You should have taken a screenshot when it hit the support over here. It's always nice to have the reaction too. You know, then you're gonna look at that and say, all right, so markets do use these levels like magnets, and we can expect some kind of a reaction from them when we hit them. All right, this holds more weight than a trend line, because what's going to happen to some of you who are trading a trend line, you might see, let's say, market move like this, but your issue might not be that the trend line is breaking like this, right? Your issue might be that the market just doesn't know there's a trend line. So it just moves like, it just keeps moving the way it was supposed to move anyway. You know, and then you look at that and think to yourself, what's really going on here? Because when I was trading trend lines, I used to have a problem with this quite a bit. It's like, okay, you would draw the initial points and those would look good. But it's later on, you start to realize like the market just kind of fizzles through that level. Almost like it didn't even exist. You know, but when you have like a very intentional and target like a support resistance, which is also like a supply and demand, these are things which are universal to all businesses. Supply, demand. That's universal. So building a foundation off of a concept that's universal is going to be very important. Correct? You got supply and demand. So this you can think of like a demand zone. As price came down here towards these levels, we started buying quite a lot. So what do you think is going to happen next time we come back down to this level? There's going to be some kind of a business being formed here that we're going to see demand. You got a lot of buyers by 44.54 over there. That's going to create demand, price to move up. All right, and then this is a support level. It's just more of a refined zone. See, we start breaking below that support. Maybe there's not enough demand anymore because, you know, price created the support over here based off of the demand. It rejected a few times. It even moved up. But this time we broke below that previous demand zone. Right? So there's not enough demand. So what happens if price keeps going in that one specific direction? What if price keeps breaking lows, moving down a few points? You know, we might just see a reduction in value of the instrument that you're trading. All right, and this is how people trade in the used to trade in the pits, was actually looking at how candles, like what levels candle closes on, what numbers is it pushing beyond, what psychological numbers might it be respecting, that sort of thing. So yeah, very, very, very important to understand how that operates. Oh, and you got the buys here as well. Nice. That was a nice buy over here. If there was going to be any buy, I think a buy at the break of those highs would have been the case. It faked out twice, like right here and then right here, and then eventually did come down again. But awesome. That's it. You're done for the day. Gbpjpy. You're done for the day. No more trades. Oh, nice. Want to play Call of Duty Black Ops 3? The most goated Call of Duty this was. Fortunately, the guy who created Call of Duty recently died. Which is insane, man. Like, the guy was driving his Ferrari in the hills, and you see, it just shows you, doesn't matter who you are, how much money you have. If you're gonna do dumb shit, you're gonna win dumb prizes. Guy, the Call of Duty, when they called it Call of Duty create over here, he crashed his Ferrari into the side of a mountain. That guy really built my childhood playing Call of Duty. Play like zombies in the middle of the night when you get that loading screen on zombies when it's all green and everything. It's the middle of the night. You're about to go for an all-nighter with your mates. Rest in peace, RIP. That little piano, that piano theme music. So nostalgic. I'm holding my gold sell. Oh, nice. It seems rejecting above 44.45 can be a pullback anytime. Is that 44.45? 44.45. What psychological marks are we currently at, though? I see like 4,500 all the way up over here. Oh, 4,500. 44.80. Maybe like 44.50 actually. Right down here, sir. 44.50. Yeah, this are two levels we're bouncing in between. So this is now the range that you gotta look at this range and see if I'm gonna take a trade today. How can I take a trade within this area over here? It's like about 430 pips, 430 pip range. This is most likely what we're gonna hold towards like pre-NY. Maybe the NY open too. Because we've already had a majority of the funds been had already. So we might see market consolidate and then set it up again later. Well, that's as long as we're holding 44.54. This candlestick here closes a bearish candle. It could give it a nice opportunity to move up again. That's going to be about like 180 pips towards 44.84 there. Sell again. Yeah, I mean, like right now it's at the bottom of the range. If you want to take a sell, you could have taken a sell before, but you could probably still get away with a sell. It's still moving down, but it's the bottom of the range. See, those are the three main levels that we're looking at. Nothing more, nothing less. We got 4,500 and we got 4,450. All the way up over here and then down over here, and then this is a price action. It's just buying. Yeah, just hit buy, guys. Just hit the buy. What was the lot size for the first sell trade? I think about like 300 lots. We got 4,500. Man, you know, this is not like any secret thing that I'm doing over here. Like, all this information is all over my social media. You're gonna find my lot sizes. You just go on my YouTube channel and go on the posts section of my YouTube channel. It may feel like I'm gatekeeping, but there's nothing I'm gatekeeping here. I'm just following rules. I think people just have a hard time following rules. That's all that it is. There's nothing special. Also, the lot size doesn't mean anything because I will still take the same trade if it's a 10-cent lot or a $1. Gold remains elevated despite slight fall. So gold futures slightly below 4,500 a troy ounce in the early morning trade in Europe. The precious metal has now continued to rally over December, having started the month at 42.74 an ounce. Gold has been supported by safe haven demand and expectations of U.S. interest rate cut. A cut in rate supports non-yielding assets in gold. Yeah, I think the main thing is because Trump is putting in a guy who's pro-rate cut, so who is most likely to be pro-rate cut. So even though the rate decision on the SME group right now says like, what is it, 80% no change? We're kind of going based off the rumor that Trump is going to put somebody in who's going to most likely cut rates within the first 2 quarters. Once a favorite amongst investors, the index has fallen more than 11% in dollar terms so far 2025, making its steepest decline in 3 years. The drop followed sharp gains of more than 47% in 2023. The correction in small cap stocks. Let's see. Experts expect the underperformance of India's small cap. Okay, this is all about stocks over there. All right, so prices are likely continuing to being elevated by safe haven demand as intensifying geopolitical tensions continue and expectations of a more accommodative U.S. monetary policy. The possibility of a more dovish Fed leadership after Jerome Powell term ends. Yeah, you see, that's it right there. Possibility of a more dovish Fed leadership after Jerome Powell term ends could serve as a tailwind See, that's what I mean, like for gold over here. Spot gold is 0.5% lower. All right, awesome. Yeah, I got some tailwinds. Tailwinds coming in there with Trump. Got the Trump wins. Yeah, see, this picture would have looked so awesome. You should update this picture over here. Update this picture to show people what happened at the support. Show people that your support here was not completely meaningless, and that was a target for a reason. That was a target. You see, as price came down right over there, because we don't know. We don't know if price is gonna go through this level. All we know is price is gonna move from this level down towards this level. That's all that we know. And we gotta trade things that what we know that price can do, and not what we feel that price can do. So if you're gonna watch yesterday's simulation, what we were doing was, if we were expecting price to continue moving down, we're gonna secure a good partial over here, and then let's see if price continues to move in that direction. But even in this scenario, it's not really a good running trade beyond that point, because there's really nothing here on the left hand side, correct? Like very simple things done well is all that you need. You know, if you get a very simple steak done well, that's all that you need. You know, if you get a steak medium all the time, or medium rare all the time, you know, just simple steak, salt, pepper, just done well, simply like that, it beats all the other complexity stuff. Apparently in Japan they don't do medium rare. I think like if you go to Japan and say you want a medium rare, it will be more rare than medium rare. Like they don't have that on the scale. Anyone from Japan in the chat? Can you confirm or deny? A very trustworthy source says that VIX trades 8 million lots with 600 leverage. That's why we're getting zero drawdown though. Because, you know, when we take the trade, price moves. It's got to move because we got a lot of lots on the table. See? Boom. Hit a sell over here. Straight. Hit a sell over here. Straight. This morning's trade kind of scared me a bit because I got some slippage on that. It was weird because when I got into my trade this morning, price hadn't moved on my broker. But then the way the candlesticks was set up, it looked like it was more down than it actually was when I was getting in. I was like, what the hell is going on here? What, you negative this month? Eisen? Didn't you say you're down like 3%? Which is really not that bad at all. You should like tap yourself on the back for that. At least you still have an account that can go into 2026. You know, we gotta have a moment of silence here for some of these other accounts that couldn't make it to 2026. Let's have a moment of silence, guys. And we're back. Man, like every week that your account survives, trust me, you're doing so. And the more I live, the more because I've only been trading for, I'm going into my 6th year now. So I'm not someone who's been trading for a decade, for example, right? Or decades. I'm only going to my 6th year of trading here, chat. I'm still a baby. But man, as the years unfold, I start to realize like people really don't know how to approach certain things when it comes to financial literacy. People really just don't know. They just don't know. And you think they would know because, you know, as you're growing up and the way you kind of like looking at your parents, you think they're adults. You know, you always feel like your parents got it figured out in a sense until you start to get older and you start to realize that they didn't have it as figured out as you thought it was. That's the same mental progression that happens with like stuff like this when you're very involved with money. You start to realize like as you're growing up in the arena, you start to see it the same way. You start to mature and you see it quite differently. And then it only shows to you why it's even more important to actually give a shit about certain things like that. Like about really making sure you're moving correct and not fast. You don't want to move fast. Trust me, you don't want to move fast. You know, the reason why some of you might think, oh, you know, things are moving slow. Maybe 2025 was not a great year. It's because God is protecting you from something that he says, man, if I make this guy move fast right now, I see something ahead of him, which is really going to mess him up. You know, so sometimes like God's going to protect you. He's going to hold you back a little bit. Going to hold you back a little bit, you know, and that's going to, then you're going to see it later. Like one time I was meant to go to the movies. I remember this one time with my friends, right? We were supposed to go to the movies. And there was a few delays. We missed the first screening of the movie that we wanted to watch. Obviously because, you know, people don't keep time. My friends are really bad timekeepers, so everybody's always late. So we're like, okay, let's hit the next one. Let's hit the next one. So as I was leaving the house, I get a call from my girlfriend, and she says that the mall that we're going to is getting robbed, right? There was like a terrorist attack happening over there. And I was like, man, this is probably going to blow over. So let's just go. We're going to meet up and we're going to watch this movie. But it didn't blow over. I think it took like, I think it was like about a week, man. It was about a week. There were like terrorists inside that mall, and they kind of held everybody there. And some people escaped, but other people got killed. And man, we were meant to be in the movies when that was happening. So, you know, like God works in mysterious ways. He's going to hold you back sometimes. You might not understand why he's holding you back, but he's doing it for your own benefit. So you have to be okay with the journey that you're on, because, you know, that's going to be your journey. You got to trust in that journey. If it's moving slow right now, it's moving slow for a reason. There's a bigger plan for you. But, you know, anyway, it's like following up on the news. People who were in the cinema actually, like, they did survive. It's not like they got massacred in there. They did survive. But, you know, just being in that situation in the first place would not have been, like, ideal, obviously. About to hit funded loss with wish me luck. Hey, good morning, Luis. Yeah, sometimes things like that happen. Maybe even you're driving a car. Maybe you're on the road, and you see, you know, like a car or two ahead of you get into an accident. And you're like, damn, that could have been me. If I was a bit earlier than this guy over here, maybe I would have been the guy who got in that accident. You know. Power of manifestation and understanding how the universe operates. Golden words, bro. 2 weeks ago, I opened a 10 lot scalp on NASDAQ on my phone. I took it on my phone. When NQ was up, I logged in to take 1,000 USD profit. I was surprised to see floating 10K USD. Let's see. By mistake, I opened a 10 lot position on gold instead of NQ. That's a happy accident. Yeah, I know. It's like it happens. It happens sometimes. Like even if you watch yesterday's live, it was so weird. We opened. I opened a single position, but when we were in profit, it looked like there was two positions. You know, and like as we were in profit, the profit was like at 3%, and we're already at a 1-to-1, but it should have been way more than that 3%. And then it just jumped to like 9%. That was like a weird glitch that happened on SoftFX. It just jumped. You know, those are like happy accidents in trading sometimes. But obviously, we removed that percent and then we did it again properly. But yeah, I mean, sometimes you get lucky like that too. Like the most recent lucky trade that I had was I used a smaller lot, the one I use like on stream, but I used it during London pre-London session, and I took a trade which hit my stop loss. But then when my stop loss got hit, it was like a managed trade, so that was like a happy accident over there. So I lost like half. Doesn't would have, should have, could have suck your energy too much. As a trader, you should really not scale all probabilities from the past, future only. Let's go 2026. 2026. This is a good time. This is a good time. I like the end of the year because towards the end of the year, you're gonna see like we're gonna get like a, what do you call it? Let's put it this way, like trading is not easy. I've seen people come and go over the years. So whenever a new year ends, for me it's always interesting just to see who's still around. Because time goes by so quickly. And you're gonna see so many people gonna affect your life, but only a few people really stick. So it's always an accomplishment, you know. If you're still around a certain thing that you're still chasing, it's such an accomplishment to still, and such a blessing to still be standing, in a sense, you know. Because if you think about a lot of businesses also fail. Entrepreneurship is quite risky, right? So whenever you got like, you know, a friend who's still in business for quite some time and is still pushing, it's always good. It's always encouraging to see someone like actually stick with something for, you know, at least like 3 to 5 years. And you know, that's something to celebrate. And they gotta celebrate that more than a birthday. So why celebrate a birthday? You know, you had nothing to do with your birth. You gotta celebrate your parents on your birthday. Then you gotta celebrate your mates, man. You gotta say, oh man, this year, congratulations. This year you did what? This year you scaled an account, you passed your funding challenges. Let's celebrate that, you know. Let's meet up, have some drinks and celebrate that. So congratulations to everybody who still made it towards the end of the year. There's a lot of accounts which did not make it. It's just a reality of trading. I'm not going to sugarcoat it because people make it seem like they're always winning on social media. But trust me, that percentage is still small of the amount of people who are actually winning. And they might win for a short term, but it's difficult to see them again in the long term. And some of you already know this because some of you have been already trading for years and years. So you have seen the progress of what happens. And that's why trading is, you know, it's not something to be taken lightly. It's a very delicate procedure, trading. It's not something that you kind of having like fun with. It's a business, you know, you got to know the difference. See, gold falls as investors lock in profits. So you got profit taken towards the end of the year. We also like briefly touched on this in yesterday's stream, like how the banking system likes to pride themselves on deposits held in their accounts, their liquidity, their assets. So towards like half of the year or the end of the year, you're going to see them hold off certain things, or you might see profit taking. So they can kind of like inflate those numbers, right? They want to inflate those numbers because they take pride in those reports. So we're going to see like some possible, like some locking in of profits here, you know, makes a lot of sense. And then see those pullbacks towards the end of the year, and then we'll see that money come back into the market from January as they prepare for the next reports. Most of the time it's like half of the year. You look at quarterly earnings and all of that, but it's half of the year and end of the year that hold like a lot of weight too. The precious metal has rallied this year, having traded around 2670. Man, even my bank, bro, like I couldn't withdraw. There was a certain amount I was trying to withdraw. I couldn't withdraw it. The bank wouldn't let me withdraw my money, you know, because like during this time, people withdrawing money, it's making the numbers go down for them, and they need to keep those numbers up. Yeah, I couldn't withdraw my money at some point. It got like to a weird limit over there. It's like, hey, what's going on here? It said, oh no, everything is fine, sir. Everything is fine. No, it's not fine. You guys holding my money. Yeah, that was it. That was it for me. That was it for me. I'm completely going as control possible, as much control as possible. Never keeping too much money in a bank. You know what it is about banks? Banks are just cartels. They're just cartels backed by the government. So whenever something happens, whenever you want to make a large withdrawal, that's when the problem is going to start to come. Those problems come when you start making large withdrawals. They're like, why do you want this money, sir? Because it's my money? No. That's not the deal here. You got to keep your money in our bank and we're going to use your money, but you cannot withdraw your money. Not a large sum of it. Because you're a liability to the bank. You're not an asset to the bank necessarily. Because when you withdraw your money, that's the worst thing that a bank can ever hear that you want to do, is to withdraw money. The worst thing. So yeah, I think getting to new levels of financial literacy here. Man, life is always a game of elevation, you know, like the way I look at things is you could either learn these lessons quick and find solutions, or you can keep going down that road. But the thing is, the problem will always remain. So if you face a problem now, there's a huge chance that problem is going to come back later on as well. I got a friend, man. I was speaking to my friend about this and I was like, who do you bank with? You know, how are they like? And he said, yeah, the same thing happened to him. Like about like 6 years ago, he couldn't access the funds in his account for like a week because the bank had gone through some kind of a scandal. I'm like, man, seriously? This is a tier 1 bank. So if you're going to ever have a problem, that problem is always going to come back in the future. So you have to see, how can I find a solution for that problem now so I don't have to deal with it later on? And the quicker you do that, the faster. You will be surprised how fast in life you can elevate and just get incredibly good at what you do. If you're very solution oriented, and every time you see a problem, you're thinking, I don't want this to ever happen again. We got to fix this like right now. And that's going to sip into your trading. And man, when you got that mentality in trading, basically you're unstoppable. Because, you know, no one can take away anything from you in the charts, because this is all a skill oriented endeavor, right? This is all based off of skill. No one can take the skill away from you. You might have a broker go bust, you might have this happen to you, but no one can ever take the skill away from you. That's a beautiful thing. And markets always got to move. Aussie banks have the nerve to ask, what are you going to do with it? Man, so that happened, and then I went on a little research about these banks. And if you go on Twitter, you're going to see a lot of people actually have a lot of challenges with banking. So it might not happen to you yet, right? But it will happen to you eventually. Let's see. Monthly is consolidated. Weekly is consolidated. Daily is consolidated. Everything's consolidating on gold. I mean on Bitcoin. It's getting ready for the new for a move soon. I think the crypto space is gonna be in for quite a surprise over here. The Bitcoin space in particular. I would not be surprised to see this thing like start heading towards our 50 psychological mark. Now that's a scary thought. It's quite a scary thought. To think of Bitcoin coming down to 50K. Because you see how it's accumulating here. Remember what we spoke about accumulation. So even if you flip this and invert the scale, look at what we have happening here. Right? So look at this. And then let me drive your attention to what happened on gold right over here as well. See that little accumulation before a level? As it's getting ready to break through that zone. Look at this. And then boom. Either way, it just broke through that level like that. And then skyrocketed. All the way up towards like 45, 50. Man, same thing happening on crypto right now. So this is when you really got to hold on to your horses. You know, if you got like some Bitcoins in there, you got to get ready for this wild ride that might be coming in soon. You might start to see Man, if you see a candlestick start to do this, just know that's the distribution from here. And we're going to be in for a wild ride. Maybe towards... we're going to clip it too. We're going to save this stream and we're going to revisit the stream later. But we're going to be a wild ride towards like 60. I think 60 would be that next psychological mark right there. But damn, by the time we're getting to 60, you know, 50 is not that far off. 50 is really not that far off over there. So keep your eyes out on BTC. Be careful of certain distributions coming out of this, because this is like a warning sign from the market typically. So you don't want it to see it break those lows. It's actually like the first trade that we took during the simulation yesterday too. Remember, we didn't get the confirmation for the buys. We actually instead got the confirmation for the sells. And then you saw what happened. So similar thing is in the works right now. It's cooking up there on BTC. That's a beautiful thing about technicals. Technicals are ahead of reality. You know, sometimes you're going to see candlesticks set up in a certain way before it happens in the real world. Because usually by the time it gets to the real world, that's when everybody's knowing about it. That's when it's kind of already late. Correct? But it's harder for it to be hidden in the candlesticks. They can hide from masses information, but it's harder to hide in the candlesticks. So yeah, learning how to read candlesticks is super important, because fundamental work is like is also kind of like it's delayed macro fundamentals. It can be delayed, but it's still really good, because as you can see, we got a lot of volume and we can still base trading off of it. But having a bit of foresight does help. A little bit of foresight before things happen. Like there's a certain way candlesticks print, and we speak about this literally all the time. We speak about it. We speak about how candlesticks typically print before something happens that we want to see happen. Even on today's trade, we spoke about the way candlesticks print before we want to see something happen before it happens. And that's also quite important to really understand that part of it. Because, you know, let me give you the most recent example that we did. A lot of people maybe were worried about a price here on gold, but we knew there's a reason why gold is accumulating here like this, right? We knew it because of experience. We had FOMC just around the corner, beautiful clean range, high probability of rate cuts on the dollar. And our job was just to wait for that volume to come. And then we got FOMC happen here. I think this was on the 10th of December. And then we got the rate decision, and your price started to move up. But you see, it's that kind of like expectation, or let's call it anticipation. You have to get good at anticipating. So whenever you're going to take a trade, you always got to use words and pay attention to the words that you're using. You know, you're using words like, you know, I'm anticipating price to move down, or am I using words like, I hope price is going to move down? You know, you have to pay attention to the way that you speak about your trades as well there too. And you see this, it came up, filled the range right towards 43.60, targets met, and then another accumulation, same as this one here, slightly printed differently, but it's still the same thing. And that's what we call an art, right? It's an art and it's not a science, because you see these two things, they're similar but different. It's an art, it's not a science. It's like cooking, basically. You know, cooking is not a science, it's an art. You're not always going to put the same amount of salt grains and same amount of chili flakes in your dish and onion powder and all that stuff. It's like an art, right? So trading is the same way. You got to treat it like an art. Start trying to figure it out. When you're going to try and figure it out, man, you know, the dish doesn't even taste as nice. A dish made by a scientist in Frankenstein lab compared to a dish made by an artist who's just, you know, freestyling based off his experience of understanding these things. That's how you got to look at trading. So the most simplified way I can always put it is prices is moving smooth like butter, or it's chopping like I don't know, like something. It's either going to be chopping like this, and when it's chopping and it's showing wicks, you can always be kind of like suspicious of consolidation. So it's either going to be doing that, or it's going to be moving smooth like butter. That's the most simplified way that I can put it, because that's going to look slightly different each time. So you're always looking to see whether it's moving smooth or it's moving choppy. It's got a lot of wicks, compressing a lot. You know what's currently happening. Because if you look at right now, for example, right, this is not moving smooth. This is chopping up. It's in a potential accumulation right now. It's very different from when we got a, who was this in the Discord here, took the sell, Gbpjpy. But Gbpjpy took the sell. Look at this. It was moving down. See this? It was moving down. It was moving down. He was looking for continuation. But now it's a different type of a setup. You know, the one he took is also different from the one that I took right over here. I took where it was still chopping up. So it's also quite important to know the difference between those types of scenarios. See this? We're still kind of chopping up. He took it when it was still moving smooth. It hit the target right here by support. And then now it's like accumulating, getting ready for next breakout, which I think it's potentially actually going to be breaking above these highs to move towards next resistance point here, which is about like 150 pips. Chopping onions, and onions make you cry. Yep. Trading in accumulation that's not going anywhere is like chopping onions before you wash them. But you know, a nice trick to say is apparently chewing gum helps you with the crying when you're chopping onions. Never tried it before. Maybe chewing gum gonna help you with crying when you're in drawdown. Like the chick from what's that show called? Where they're traders. It's called The Industry. You know, this chick was like, she was also trying the onion, the chewing gum with while cutting onions, but in this case she was in drawdown. Yeah, here she is. So yeah, what did she do? She like took a buy on see, she's trying the trick over here, chat. You see? She's got the gum in. She's in drawdown. Other chick here is just drinking a Starbucks. Like, she's stress-free. This one is done. She's like, I'm done for the day. 1 or 2 trades, I'm done. I'm just chilling here, drinking my Starbucks. This one's the one who's an overtrader, who's like, oh man, no, we gotta take another trade over here. Let's sell some more. But she's not crying, so it looks like the gum did help. Holy. Imagine that, $140,000. Just like that. Oh yeah, this part was kind of like, ooh, then she bites her tongue. Starts bleeding. Shit. That's actually the worst feeling. When you bite your tongue when eating. Oh my days. Oh my days, look at that. Yeah, you know, like you're gonna put blood, sweat, and tears in this game. No one gets it on a silver platter. Oh, look at this. Price is moving up, just like we spoke about. Now it's distributing. Now it's getting away from this zone. This had small little accumulation area here, and it's cleaning up that range on the left-hand side. Awesome. Very nice. I love this game. How can you not love trading? How? How can you not love it? You know, like when price does what you expect it to do, you almost feel like it's illegal to learn how to trade. You're like, man, is this legal? Is this legal? Can it be legal? Because, you know, trading and gambling is so different, because we always say gambling, you got to gamble. You gotta play when you're on the chart, right? Trading's so different because you don't have to trade. You can literally sit at the table and just wait for the cards to get hot. Take your trade and then that's it. If casinos could allow you to do that, I think that would also be really good. Like, just take maybe one or two games. But you still have to know when to play. Because it's not always important to know. You gotta know when not to play and when to play, correct? But most importantly, when not to play. Because most of the time it's when not to play. Even if you go to a casino, it's most of the time when not to play. Right? That's why they stay more profitable than not. Because the house always wins. So you gotta know when not to play. If I chew gum during drawdown, I'm gonna get you're gonna get so hungry. Please can you also check Bitcoin? Yes, man, like we already spoke about Bitcoin over here. How much did that peak? Boom, about like 70. Nice. Very nice. Yeah, I'm back on the charts, guys. We'll see how market is on Wednesday, Thursday too. I want to kickstart off 2026 already. Let's see. But I don't know if I'm gonna break my record in 2026 over here. This was a record for me. 332%. This is a record for me because also gold was paying so much this year. So hopefully we can keep the same momentum up for 2026. And all it is just like grind. Just grind. That's all it is. Find something that you're good at doing and then lock into that thing and just freaking grind for the next 5 to 10 years. But yeah, it's already filled up like pretty good amount. I got 71%, 71 pips on that break off the wick. Beautiful little distribution play to the upside on this move. 0 drawdown entry confirmations too, as you can see. Just smooth like butter, went through that zone. And it's a different market environment as well, because you can see the market is overall just moving sideways now, right? Like we got support there, we got resistance up over here, just moving sideways, chat. Like it's kind of also different from when we first got in, because when we first got in, we were still experiencing a lot of this kind of like bearish movement to the downside, right? So that was just a little pause over here. Took a little pause over here before price started to now show us a bit more dynamic PA. Then it came down, ended up filling that range. Respected that little accumulation, breakout, but it's well within this whole zone. See, simple. So now you know your playground. Basically, you know where the playground is. And understanding the playground sometimes is also going to be something that's going to contribute a lot to like what you can expect. Obviously, your confidence in the trades, you know, because like this sandbox right over here, it's a different sandbox from the one that we have right over here too. So we got to approach these two slightly a bit differently. Right? And then in between that, you get the small chunk of it, which is that distribution. So you got consolidation, and then this is that small chunk, which is just distribution. All right, but that question, how could you have caught this move over here? You know, some people caught on the candlestick closing below support. Some people, I don't know, they do fake out strategy above here, but we don't talk about those people. Because that's just people who just do the opposite of what price does. Because they could do the same thing basically here and then get stopped out because price still went down. So those are people we call like enemy of progress. You know, like when price is heading towards a certain direction, they want to push in the opposite direction. Like trying to put the animal back in the cage. Like you don't want to put an animal in a cage because the animal doesn't like being in a cage. You know, so eventually it's got to break out the cage. You don't want to stand in front of a cage, man. You're going to put a rhino inside of a cage. You don't want to stand in front of the door. But this has been, majority of it has just been kind of like a little bit of choppiness over here. Paid out quite nice. Little choppiness here, paid out beautifully. The issue was not that it didn't distribute. And this is very, very important because this is something I think a lot of people are going to struggle with too. Is they think that the issue is they're not catching this. The issue is not that you're not catching this. The issue is that you're being too greedy when you're catching other things. Like you see, like here, for example, or like here, for example. That's what the real issue is. It's not that you're not catching this. Because it's a lot harder to catch this consistently than it is to catch something. And secure your day with something here or something here. So one thing about this stream is, man, every time you come to the stream, you're going to learn something new every time. And you can't plan this, you know, you can't plan this. Very difficult to script this. Because you're going to stream for like 3 hours daily. But it all comes down to the sort of like opportunity that we get in the market to explain certain scenarios as clearly as possible. Right? And that's why trading is a journey. It's an endeavor. The more you're doing it, the more you get these opportunities. It's all opportunity. You put yourself in a position to get those opportunities. Like Will Smith in The Pursuit of Happiness. He didn't get lucky becoming a stockbroker towards the end of that movie. That was not luck. He put himself in that position where he made his own luck. All right, so you got to keep showing up every day because you just might get lucky. You're going to never miss a lucky day if you show up every day. That's the thing about lucky days. That's the thing about luck. You never miss a lucky day if you show up every day. So today might be the day you didn't want to show up, that you're going to learn that one thing that's going to take you to the next level like that. And then people ask, oh, what's your aha moment? Man, the aha moment is just showing up every day is the aha moment. It's not just one thing. Because, you know, if you're getting 1% better every day, that compounds and looks a lot. It looks really good at the end of the week. It looks really good at the end of the month, at the end of the year. But it doesn't happen all at once. Just gradual gains. So I think if you learn something here today, something new, then amazing. That's all that you got to do. One new thing a day. That's enough. If you manage your risk today, if you secured something today, even better. What's my account size? My account size is $2 million. 2 million 2 million Indian rupees is my account size, sir. Trading is the best, man. I don't need to be nice to anyone. No calls. I work when I want, where I want, and there's exceptional growth in terms of salary and learning and self. Yeah, exactly, 100%. Exceptional growth. That's the thing about a skill orientated. You know, the thing about exceptional growth, you could say in trading it has exponential growth because you kind of like have full control over the financial part of it too, right? But it's the same thing as in like anything that you do. Like if you're incredibly good at your job, your 9-to-5 job, you also get exponential growth in that as well because your boss is going to see value in you. He's going to want to keep you around. You're going to give yourself a lot more opportunities as well. So exponential growth definitely is like, it always comes to the same thing. How willing are you to get good at what you do? You know, like, do you care about the details? Because there's a huge difference between seeing work from people who care about details and who don't care about details. You know what I mean? So, man, in trading, if you're already a profitable trader, it shows that you care about details. If you're consistent, and that in a way is the market's way of also giving you that promotion. It's like, man, this guy, he's proven to himself or proven to the market that he's consistent, right? So he deserves some kind of a promotion. Think of the market like your boss, basically. And you kind of want to be on the boss's good side, right? Because the boss has got a lot of lemmings to deal with on a day-to-day basis. You know, so he's like the Scrooge. Have you ever watched the Christmas movie The Scrooge? You know, that guy is like, he's like the CEO, and I guess like he doesn't like, he's like the Grinch, right? He doesn't like to waste time. He's very cold-hearted. That's how the market is. He doesn't like to waste time. So he just wants to see if you're following your rules. So if Joshua can come in and, you know, pull a couple of dollars out the market and then leave, awesome. But if Josh is just gonna be like floating around and, you know, being useless and just wasting time, then, you know, that's also gonna cause the market to take back those dollars. So you see, like for me today, I took 2 trades today, and that's it. That's all that I'm gonna do. I'm not gonna get on Boston nerves. I'm gonna come, follow my rule. I'm gonna come back tomorrow. You know, so the less he sees me, the better. But he's only gonna see me when there's something getting done over here. Thanks for the high value education. I'm learning a lot. Welcome, Momar, or appreciate it, Momar. I think I've seen you on the stream before. A small account of $1 million. Yeah, Donald Trump. And even Donald Trump was bankrupt at some point. Yeah, it's sad. Like this guy on the street over here, this homeless guy is probably richer than I am. Imagine Donald Trump, bankrupt. Of course, he always had rich family, but you know, still messed up. But that's the thing about a confidence in what you do. You know you can always get it back, even if you do hit rock bottom. Like people hit rock bottom, it happens. It happens, but it's just all about like how you get back up, right? Because now you know that if you've already gotten here once before, you can get back there again easy, right? Just next time, just gotta be a little bit more careful. That's it. That's all that it is. This is my first posting. Also forgot to take the before picture. Learning a lot in this short period. Let's go. Very nice chart work. Looks very clean. I can already see it. Accumulation, manipulation. We got that liquidity grab. Man, as our first chart, this is awesome. You even got the indicator set up here, and you can see the breakout liquidity grab. Amazing. Yeah, this is an excellent chart. Excellent shot. That's what it was. And you know, the funny thing is, remember when we were speaking about this, I didn't even go on the 1 minute time frame. So how would I know? How would I have known that there was a setup over here? I didn't even go on the 1 minute chart. And that's how I was showing you. Like, look at the way candlesticks are forming. It's creating a lot of those wicks. It's getting a little bit compressed. You already know what's happening on the 1 minute time frame. You don't even have to investigate it. And then you got to see, like, where's the clean traffic? Where's it heading to then next? You see people made some money over here. It's about like 70 pips. 70 pips. But now the problem always comes if you're going to be too greedy, because now price is going to come back in. It's coming to do some psychological work over here. It could either be coming to take some more orders, right? Seeing if there's more buying pressure so it can continue creating new higher highs, or it's just coming down to do a little bit of spring cleaning over here. Maybe it's just gonna come down a bit more to take out some positions. But in any case, you never want to see a trade move like 70 pips and then come back into your entries, because we got pretty tight stop losses, like 16 pips, 20 pips. And if you're gonna get a winning trade, like a really nice winning trade, most of the time the ones which are like perfect are just the ones which just keep going in your direction. Like the one this morning, for example. You know, it wouldn't even have mattered if I put my stop loss to break even, because price just kept going in my direction anyway. And the more you show up, guess what? The luckier you get. The more you show up, luckier you get. So you don't have to get it today, but you keep showing up throughout the whole week. Leave one of your trades to be a running trade, and eventually you will catch that bomber clot. Out of 2 trades a day, you give yourself 1 shot per day, as you get used to seeing these opportunities. Saw a short from Vic 3 months ago, before my session, almost identical to today's PA. I ended up taking 1% win buy position. A few minutes later, the move I actually wanted happened. Oh, nice. Yeah, you got kind of squeezed over there to take a buy, huh? Originally wanted to sell continuation under this range, as price was down 0.35% on the day. Super clean range on the higher time frame for sells. Price had come from the bottom of the range with small consolidation on the 5 minute, almost all time frames, SMA supportive buys. Oh yeah, don't look at the SMAs. The SMA is gonna confuse you. Look at the PA. SMAs, if it's there, it's there. Awesome. I don't even know. Did we get SMA confluence on the sell? Probably did. But if SMA is there, it's there, you know. Yeah, we had the death cross happen there on the 1 minute. Got the death cross, and we got also, I remember now. Yeah, that's what happened. The 5-minute was being bullied. Remember this 5-minute candlestick here, chat? It was basically pulling up, and then the SMA bullied it down. It was like in the last few seconds before it closed. You see how that bully SMA came in clutch? Look at that, like held it down right now, right there. It held it down, and then the next candlestick did this. Roop! Because you got that bully SMA. See that bully SMA over there? So I think it's nice to see it, but never base so much weight on it. Let's see, entry clean after break high. 80% secure, 20 pips partial hit at BE. What I actually, man, you could have caught this really amazing sell-off here. Because as you said yourself, daily was down 0.35%. So that was a higher probability you would have caught a bearish move. You know, as simple as that. Daily was moving down. Look at the daily time frame. What's the probability you would have caught a bullish runner? A lower probability, especially this early in the day, like much lower probability. Oh, we got a video here.
So the thing about gold is you have to watch where the major candlesticks are forming, because if you understand that candles are printing very bearish with a lot of
Yeah,
first
exactly.
1,300 on this move. But if you can see where the major candlesticks are printing and you get your entry confirmations, there's a pretty good chance you get that continuation. So
Yeah, man. You know, I gotta say these things every day, but we're just gonna say them every day. And then maybe one day someone's gonna look at that and have that small 1% gain. Sometimes you just need that small piece of the puzzle to really, like, you know, kind of like open you up a bit more. Like someone's gonna say something and you're gonna say, okay, so this actually looks quite interesting here. But it takes time. It takes time. Also, like looking back at my journey, all that information that I was taking in was, I was listening, but I was just listening, you know. I was listening, but it didn't hit until more towards the tail end of my first year. Because it's overwhelming and there's a lot of information that you have to go through. But when you start to settle down, when the what do you call it, like sediments? If you put like dirt inside a cup and you got, like, you know, the sediments are like floating and everything, and you know you have all these ideas, but once all that starts to settle down, then you start to build, you know. That's when the sediments also start to like get all muddy and stuff, and then the cup starts to like build properly. So that's how I kind of like look at it. That's how I kind of look at it. BSE small cap turns one of 2025's weakest global assets. Gold, silver stands out. Once a favorite among investors, the index has fallen more than 11% in dollar terms so far in 2025, marking its steepest decline in 3 years. The drop followed sharp gains of more than 47% in 2023, 26% in 2024. India's benchmark Sensex and Nifty delivered muted returns with gains around 5%. Morgan Stanley also expects small cap stocks in the US to outperform large caps and cyclical sectors to do better. Defense ones. On the 15-minute time frame, this is set up. What's the setup? You gotta send in a chart. I can't read your mind. How am I gonna know what setup you're looking at? Damn, Daniel. Got like some Bitcoin 10 lots over here. Buys on BTC. Oh, but it looked good once upon a time. Oh, wow. Look at this. You had a nice balance over here. Your balance was 1,316. And you scaled that up to $10,000, $11,000. Insane. But I think you held for too long. Yeah, that's what happened over here. You held for too long. Holy. Look at this risk rewards here. This is a nice one though because of the range. So this was a Bitcoin. I wonder how this actually played out for you. Let's see. This is on the 3-hour time frame. This was on the December 28th. And it was a long position for price to continue to fill this range. That's a 3-hour time frame. But anyway, you know, it's still got like clean range over here. And then price come up towards like 89,242. But you see, you got your take profit even above 89,240. This is like very risky, especially if you don't secure any partials along the way. Then because you know price can only move from where it's currently at towards the top of that range. Right? And it doesn't always fill the range too. It can just come in, fill a good amount of them, like 50, 60%, and then come back down. So yeah, it's December 28th. Can find this. December 28th. Let's go, let's go, let's go. 3-hour time frame. Let's see. Record time. Can we find this? December 28th. December 28th. Oh, right over here. Oh, wow. Oh, wow. Look at this. Look at this. It filled that range beautifully. It actually filled all the way there towards TP over here. Now, the only thing was, let's see the stop loss here. The stop loss survive. Yeah, that pullback down there. Let's see. We got those. Ooh, man. That would have been really pissing me off. Holy. It came right for the stop loss and then skyrocketed like a crazy monkey like that. How is that possible? Man, you know, sometimes you're going to think that the market is rigged. How did it know? With all the strategies in the world, with all the possible entries, everything here, how did it know exactly right over there? Right over there to come to hit before it goes all the way up. How did it know this? How? How does the market know that? You know, that's why we always think to ourselves, like, how? Every day we're like, how, man? How? How does it know? How does it know, chat? How? Man, insane though. Look at this. You would have made so much money there. If you were planning on holding that too. You should send the after picture. I don't know, man. I don't know. All I know is if that's happened once before, it's gonna happen again. So what's the solution? That's a problem right there. So what's the solution to that? What can you do differently next time? Give you a hint. Manually close your position. Don't set the physical, but if you got the luxury to be on the charts during that same time, like manually close if you see it really push to that level. Don't post your trades on TFX. They're watching. That's true. Maybe you already have some kind of quantum computing which can go through all Discord channels, Telegram channels, and then see. But this is crazy though. It's honestly crazy. That's honestly crazy. But it could be something you did wrong with the analysis as well. Because the same thing happened to me on yesterday's live simulation. Was I took a trade. It stopped me out right on my stop loss and then went in my direction. But I quickly realized the stop loss placement was just wrong because the way I backtest on TradingView. Most of the time I base my entries off TradingView. So stop loss should have actually been the TradingView one and not the one that was on MetaTrader. Then I re-entered and then, you know, everything was good again. But if I didn't catch that and I didn't re-enter, I would have also just been stopped out literally by like a pip. And then at that point, price just completely melted. And that trade was like a beautiful trade. Long silver. Today night, I will be... Oh, people really want to trade silver, huh? What's going on here? But silver is quite down on the daily. It's like moving crazy. Previous daily was like 10%. Silver actually does percentages quite easy. Because on gold we'll mainly like see like 1%, maybe like 2%. Silver usually does like 4%, 10%. Right now from the open it's already down about like 4.45%. Gold is just about 1.30%. I think on gold, like when we peak, we're peaking most of the time like maybe 2.30, 2.50. Like that means silver actually moves quite a bit. Look at these sell-offs here. Nice little M pattern, little distribution to the downside. That we got too. Boom, boom, boom. Silver going 90. Silver is too much for me to touch. Over 100% gains for the year. Really? Over 100%. Are you sure about that? Because I thought silver did like about... Could it? Actually, could be. Yeah, you're right. Because last time I saw... Yeah, silver was ahead of gold. Gold was like, what, 65? And then silver was... Yeah, it could be. Because we're getting these really crazy pushes towards the end of the year too. Could be like over 100%, right? Gold peaked at like 66%. I think gold should be at what, 70% on the year now. Spot silver was up 0.70% at a from an all-time high. A combination of profit-taking and seemingly productive talks between Trump and Zelensky regarding a potential peace deal have put gold, silver on the back foot. US President Trump said on Sunday that he and the Ukrainian President Zelensky are getting a lot closer, maybe very close to an agreement to the end of the war in Ukraine. Because you can't imitate this. Remember that reporter asked Trump if everything in the office is gold, and he's like, everything here is real gold. You can't fake gold. It's all real. You can't imitate gold. Silver has gained 181% year to date. Sheesh. 181% on the year. Outshining gold, propelled by its designation as a critical US mineral, supply constraints and low, you see this? Key word over here, supply. Just like demand, support resistance. Constraints and low inventories amid rising industrial and investment demand. Valium has also staged a stellar rally in 2025, climbing 72%. It should be at just about 70% now. So far, and shattering multiple record highs. Let's go. See, gold has been helped by a cocktail of factors, including bets of further US rate cuts, geopolitical tensions, robust demand from central banks, and rising holdings and exchange traded funds. Rate cuts and a contribution of robust industrial appetite paired with supply shortages could have silver primed for a run towards $100 in 2026. $100, huh? So we're right now at 75. Like 2026 got 100 over there. It's gonna be next psychological mark. $100. And gold are looking at a 4,700. 4,600 maybe. Let's say 4,600. Because we got to move up in these increments, you know. We can't just say gold is moving to 5,000. We have to go 4,600. We're going to go maybe 4,650, but you know, 4,700 is going to be the next target. See a little small accumulation happening here too. Looks like it's getting ready for another breaky. Another breakout. Another possible shotgun on the 5 minute. Yes. Yeah, exactly. Candles closing below support over here. Starting to like slightly break below. That's next level here, about 44.68. This is a calm down, correct this move. Like 70 pips. See what happens, see what happens. Small little accumulation there. To be honest, in the long term, scalper can't last long. They can't catch big trend swing or position traders stay long in the game. I mean, what are you trying to stay long in the game for? That's the question you gotta ask yourself. Like, would you rather spend 2 years looking for a one-to-one position, or would you rather spend maybe a day looking for a one-to-one position? Because you are correct, like to some degree. Scalpers, if you get like a very nice entry, then that same stop loss could be a swing trader's stop loss, for example, right? The swing trader is going to come in a lot higher, whereas the scalper is going to come in quite low, but their stop losses could be the same spot. The question is, like, why do you want to have a long position, like, to trade for that long period of time? That's what you have to ask yourself. Because for me, man, like, I'll personally just get a one-to-one in just a few minutes. So, like, you know, 5-10 minutes, then wait a whole week or a month. You know what I mean? I think what it is, like, if you want to be on the safe side of things and you're trading ETFs and that sort of thing, yeah, I mean, you want to be having a lot more space. All right, catch you later, Luke. What time is it right now? You do want to have a lot more space for your trades to play out if you're going to be trading a substantial amount of money, right? But if you're not trading a substantial amount of money, then what benefit do you get from holding it for longer? Like having a big position. It's the same reason why, like, people are going to have like money investment accounts. They don't really make that much money from them because they don't have a lot of money to start with. So your bank might give you, like, you know, 10%, I mean, like 5%, most of the time, like 5%. And if you don't have a lot of money, you know, 5% is really not that much. And by the time you start making a lot of money from it, inflation and everything would have caught up and your money would have already lost value by the time it's at a substantial amount, because cost of living is always going up and it's quite expensive now too. So the issue here is, like, do you already even have the money to really benefit from long-term holds like that? If you don't have the money, then you have to solve the income problem, because that's the number one thing that you're struggling with, is how can I even get that income so I never have to work again? Oh wow, look at this. Now it's starting to follow through here. It's got a nice little kiss of death above that candle. Beautiful little kiss of death situation over there. Yeah, I gotta solve the income problem first. Now you're gonna solve the income problem. Gonna get good at scalping. Because you know that when you scalp, you gotta be having a chance, a better opportunity. Like look at the trade that we caught this morning, for example. You know, that was already an insane trade. Imagine holding that. Or just look at the trades that we took on yesterday's live simulation that we did. You know, because the whole idea behind when I started trading was to solve the income problem. Because I had an income problem. I didn't have the luxuries to be waiting a month or like be trading the monthly or the weekly time frame. I couldn't learn from people like that. Because, you know, those people were like a whole different level than I was. I needed to solve my income problem first. See, M15 potential breakout plays. Got a nice little support. Nice. Beautiful. I don't like that idea. They say scalpers can't make it in long term because market conditions change. That assumes that scalpers can adapt. And it happens to everybody too. I mean, if market conditions change, how is it only changing for the scalper? It's impossible. It's changing for everybody. Because if you look at the market as a whole, and if you look at our economy as a whole, when COVID happened, what happened? It changed everything for everybody when COVID happened. When interest rates came into play and the US dollar was changing their rates, what happened? That affects everything for everybody. You know, this is all happening here on the higher time frame. So if something happens in the real world, everybody's getting affected. Not just scalpers, every single body is getting affected by that. You know, even you could argue scalpers are even maybe the least affected because we're a little bit lower under the radar, right? Because for you flying so high, you have a lot of exposure. So throughout the whole year, you're going to have like maybe a COVID happen. You're going to have maybe Trump do some dumb shit in Venezuela. You have so much more to think about than a scalper who's in and out of the market in like 15 minutes, right? Just think about it like rationally as well. You know, like make it make sense. You know, when a tsunami is happening, guess what? Maybe the fishies under the sea, they're the safer ones. You know, under the sea over there, they don't see no tsunami. But you're at the top of the tsunami. You're here. We're down here. We don't know there's a tsunami happening up there. You know, maybe we know it's happening. Well, like, okay, you know, it's not so bad down over here. So it's all a matter of like perspective. $45% is perfect according to hedge funds. Exactly, because 45% for a hedge fund is more money than I think anybody in this chat or on YouTube is ever going to touch. Like the probability of people who are going to touch that amount of money that a hedge fund makes 4 to 5% individually is such a low probability. Such a low probability. That's a lot of money for them because, you know, they're working as a team. That's like funds been pulled in. Basically, get funds pulled in. You can't, you know, they say if you want to go far, you got to go with people. If you want to go fast, you got to go alone. So what a hedge fund is, they're going with people. So they're going to go like very far. So, you know, we can make like 10% a month, 20% a month, and that's going to look quite different. Every kind of trade style is just a way of making money. All work best with suitable personality. Yes, exactly. You just got to find that personality that suits your trading. Theoretically, if hedge funds could scalp, they would also be able to pull off 20% months. No, because they wouldn't be able to scalp. You know, think about it this way. If a hedge fund was to scalp the same position sizes, If they take a buy over here, their entry will be literally up there. They're creating the slippage. They're making this candlestick move. They won't be able to profit like us, where we get in here and we get like that entry right there. They get their entries basically up here. They're going to be in drawdown until price. That's why price usually comes back like lethargically like this sometimes as well. Because you can have a player move the market like this, but then it's not like a real... It's not like the real move yet. It still has to play out. So it'll come back down. It will retest the area, see if there's any more buyers in here, and then continue to move up. That's the tricky part. Yeah, you said theoretically. I mean, I think the thing is like, hedge funds move like, basically they use a lot more fundamentals, right? We're gonna use like 30%. I mean, we're gonna trade like, as retail traders, most of the time we're using like 90% technicals. They're using more fundamentals. They might not even have strategy like necessarily. I don't like speaking about this because there's a lot of like what do you call it? There's a lot of things that, you know, I might say which might not be necessarily the case because each fund might be slightly different. But just like in a generalized perspective, if they were scalping, what I've seen hedge funds do with scalps is like hyper trades. They do like hyper trading, and they have like their own sort of like very complex systems which can achieve such things. I think it just looks a whole lot different. But one thing that is true though is accumulation and distribution. That's one thing that is true. So even whatever it is that they use, this is still something that remains... the way you explain your enemy can be your fan. Yeah, I think it's like high frequency. But one thing is true, it's that this remains the same. You see this accumulation and distribution, it remains the same. And that's why we see that similar reaction when we take our trades. Because, you know, at the end of the day, if you're a hedge fund, if you're a retail trader, we're all looking at the same chart, right? We all share the same sort of like, we're all looking at the same candlesticks. And candlesticks only going to move like 3 directions, up, bearish, and sideways. So it's all about like finding the thing that happens before another thing happens. You know, and that's the thing, is like you want to be in those positions consistently, because that's when the market 90% of the time is just like ranging. It's in my opinion, it's not necessarily paying anybody out. So you got to find these small sections where there's at least amount of randomness. That's where the people are going to be making their money, right? In these small sections where there's a least amount of randomness is where we make our money. But we want to stay away from majority of it, because majority of it is just noise. That's why we got to limit the amount of trades that we take. But anyway, I don't want to argue with anybody, because everybody's opinion in this regard could be correct, because none of us actually trade at a hedge fund. But at the end of the day, it's all about what can we see in the market that's happening consistently, and use that to our advantage to make money. Because at the end of the day, we're also just trying to make money here. We're not trying to be right. I didn't come here to say that I'm going to be right and everything that I say is going to be right. Heck, I could be wrong most of the time, you know. You just got to take my word for it. But what I'm going to tell you is things from experience. I tell you things from experience of things that I actually see, not my opinion. So I got opinions regarding that subject matter, but I don't have any evidence to back my claims. But all I can tell you is there's something interesting that happens when something happens. And then you start digging into that and you start to realize, man, like, this is not random. Like, how can it be random? You know? How can you be consistent then if it's random? How is that possible? How can trading be real if it's all random then? How? Today, gold is pretty bearish. Don't see a really good push up. Yeah, it's still bearish. It's still definitely moving down. It's still definitely pushing down. It's filled up the range from... Hey, where'd my analysis go? Just went on a rant over here. Sometimes I get confused when I start going down the rabbit hole. Yeah, finally pushed down towards that support. So range was cleaned. Range was mopped up. Right over here, you got a small little reversal play as well. Basically, the reversal play was from this section right here. So remember we had the breakout situation that happened here. A break of these highs, it distributed. So this is what happens when buyers get greedy. Right? The market already gave them a warning sign, which is this. That's why we said, like, you know, price had a support over here. And then the next support was going to be here for about like 71 pips. And then you see the range has been filled. And this is what I mean. This is all that I can speak about. We can banter about those other things like the boogeyman and book maps and liquidity and all of these other things. But all I can share with you is what that I see happens. Because that's the only evidence that me or 90+% of us are ever gonna truly have is candlesticks. Because if you can't read candles, then you can't trade. Simple as that. You know, everything else are like tricycles, right? It's like if you can't ride a bike on 2 wheels, then you can't ride a bike. Because what happens, like, people are gonna try to ride a bike, they're gonna have the indicators, right? They have all these indicators on their bike. Until you gotta at some point remove those indicators, and then you gotta tell your son or your daughter, now it's time to ride the big boy bike. So that's all that I can do is ride the big boy bike here, because nobody is going to give me access to a Bloomberg terminal. I'm not going to pay $20,000 for that thing to overcomplicate my trading. You're not going to pay $20,000 for a Bloomberg terminal because you're not going to know how to use it. And you're not going to get paid for using it. You know, like how employees get paid at hedge funds. They get paid for that. And they don't pay for it. But you're not going to pay for it. You're going to pay for something that maybe costs maybe $1,000. But you know, you're competing against something that costs maybe $20,000. You're competing against that. How can you compete? That's like a Ferrari going up. That's like a Honda Civic going up against a Ferrari, you know? Sure, you got a good deal on the Honda Civic. It's, you know, it's going to last you. It's reliable. But man, when it comes to it, the Ferrari is going to win that race, my friend. So, you know, you got to stick on your lane. Honda Civic is going to do well for long journeys. So you're here for the long term as well. And you're here to stay on your lane, not the Ferrari lane. You can't get access to Ferrari unless you work at a bank. You don't work at a bank. So you got to look and see what can you do based on what you have available to you right now. And that's how every legend story starts. Every legend starts with them using what they had in the moment to get the job done. Correct? So what you got? I didn't start with a $1,000 account. I didn't start with 50K. I started with $500. Does a support or resistance far left in a range affect a clean range? Far left depends how far back far left, but we're kind of looking at this most recent chunk of PA right here. Because if you start looking, I think far left you mean like something like this, correct? If you start doing something like this, that's going to overcomplicate your trading. Hey, I got Rainsy in the chat. Hey, welcome. We still got a bunch of people here still on holiday break. A lot of people still on holiday mode, which is understandable. I bet some of you are wondering what I'm even doing on stream today, but holiday is already done for us. Actually, this whole holiday break, price moved exactly like we said it would move. But, you know, at some point, I also just gave in to the whole not looking at the chart as much thing as well. Because, I mean, we went pretty hard already this year, so I kind of give myself a small break. But, man, price did exactly what we said it was going to do. And it moved. and it's still moving. It had like one of the biggest candlesticks on Christmas Eve in the whole month. 1,000 pips. Come on now. Artificial. It's all artificial. Money doesn't know Christmas. It doesn't know good days or bad days. It just moves. And if you put yourself in the place to get splashed, you're going to get splashed. But if you're going to put yourself in the sidelines all the time, then obviously you're not going to get splashed. And you know, that's what people do here on holidays. But it's not coming from a toxic hustle culture, but you need to get rich. If you are not where you want to be in life right now, you need that toxic hustle culture, because it is a cutthroat industry. Everybody wants what you want. You're competing with people like me and people greater than me on a daily basis. So how can you afford to not want it as bad as they do? You can't afford it. You gotta be willing to pay that price every single day. And the price changes, because some days you can do it, some days you don't feel like doing it. But the trick is to do it to a point where it becomes a habit. Because when it becomes a habit, it's going to be much easier for you to do it. But if it's not a habit yet, then it's going to find it a lot more difficult to do it. Don't get too comfortable either. It's really easy to get comfortable. But the longest I would ever give myself from the charts in a whole year is, if anything, maybe just about a week. But that's already pretty damn long. So it's like a habit, you know. Even when you're sick, man, I still look at the charts. Anything happens, always gonna look at the charts. It has to become like that one thing that you basically do every day, right? And even if you work a 9-to-5 job, you still look at the charts. Give yourself like 1 or 2 hours a day. Instead of watching Stranger Things or that TV show, man, how about you look at the charts instead? Do a little back testing. 1 hour a day, 1 to 2 hours a day. That's all that it is. Setting priorities. I always position myself, but the splash always splash always misses. Don't worry, bro. You gotta get splashed. Like, you gotta eventually get splashed. Like, you know, like Mark Cuban says, you only gotta be right that one time. You know, sometimes you just need that one splash. That's all you're looking for, too. You don't need to be right all the time. People not getting it right all the time, man. Like Warren Buffett says, he only gets it right maybe twice a year. He would be happy if he got it right at least twice a year. But he still puts himself in a position to have the opportunity to get splashed. That's how you're going to look at it. Don't look at it as like thing that's going to happen continuously. You get these wins. These are really big wins, but they happen in a year. Maybe, I don't know. What would you even say in like a whole year getting like really game-changing wins, you know? Maybe not that much. You know, it's different. For me, my splash was figuring out my system. You know, I'm not getting splashed every day. I've just figured out my system and I'm just doing what my system tells me to do. I only get splashed whenever it's like something breakthrough. Like, for example, this year, the one good decision that I made for the whole of this year was to focus on gold. That was the best decision that I could have made for this year. And you see gold is up about 70%, right? And we made this decision in April of... This was April, towards like the 3rd week of April of it. That's why I mean, like, throughout a whole year, you're going to make maybe 1 or 3 really game-changing decisions that you're going to make. You know? And then you got to stay flexible. You got to stay adaptive. It was to focus on gold and then to focus on swing trades as well. You see, we had these swing trade entry models too. Swing trade. I think that might have been the second because we had to adapt to the volume. So that was a second thing that kind of helped me kind of stay in the game over there. So we have that swing trade. And then I think the last one was to stick with the consolidation for the rest of the year to close it out. So you see, throughout a whole year, you just got to make these right plays. The small little detail oriented, like small little adaptations for a lot of us still learning how to trade. The first thing is just going to be find a system. Just to find a system that's a foundation. Because that's not going to change. Foundation remains the same. The only thing that's going to change is a small like adjustment of stop loss. It's a small like, oh, maybe I should wait for a trending market condition. But the entry is going to look the same. The time that you're trading is going to look the same. So everything like more or less stays the same. But the big splash is finding first that system that can stand the test of time. Not one that's here today and gone tomorrow, but here that's here today and is here to stay. And on that bar, I'm going to close off the stream and I will see you all tomorrow for the London session. Adios, everybody.
Cash in the bag, clutch, take the belly, quick, pull up in the whip,